You guys obviously have compounded massively on Solana. I imagine these metaverse social tokens, even ecosystem plays, are a much smaller aspect of your portfolio versus the Solana bet early on. Would you maybe liken jumping into metaverse and social tokens as jumping into Solana early on? Same uncertainty, or do you think the base blockchain tech layer was a little bit more obvious than some of these other?
So I think these are different forms of investing. Investing in layer ones and that kind of a thing is some function of like belief in an architecture and how things will play out over time. Investing in social tokens is what I call it's very squishy. There's a lot of weird things that happen when social tokens hit humans, right? Like, how did the creators respond? Which creators use them? Which verticals are they in? How do the fans respond and engage? It's impossible to understand, or actually, it's possible to forecast all of those dynamics ahead of time and how they'll vary across different creator communities. What's also interesting is there's certain things that like community, let's just say, I don't know, rap music is like a bad community for social tokens, but electronic music is good. I don't know if that's true, but let's just say it's true. What's interesting is that the wrong go-to-market strategy may be go to rap first, but maybe if you go to electronic music first, get that to work, then the rap guys say, oh, I see how this works over here, and I'm going to copy it now. And a lot of these kinds of dynamics are just really, really hard to forecast in advance. And so when we think about investing in something like social tokens, that's very, what we're looking for in founders, how we think about risk is very different than when we invest in something like Solana, which we're saying, okay, look, we can examine the architectures of all of these systems, understand the trade-offs they make, and we can have conviction that this is the right architecture. So it's a very different type of risk in investing.
Yeah, that makes a ton of sense because it's so nascent. You don't know which part of the sector is going to hit and take it, because these things, they may start as one thing but develop into another. So almost like taking a small basket of diversified risk across these when they're so early may be the way to go on something like that.
Yeah, I mean, a lot of people, you obviously want to size their bets accordingly because you just never know, right?
Yeah, 100%. And then moving more into this idea of venture capital and funding, how has it progressed over the years based from like original Silicon Valley tech startups versus now Web3? We're seeing different tokenomic structures. They're obviously not perfect, but there's this entire aspect of community tokens, yield farms, and emissions. How's this different? Also, what are the dangers of bringing in the community at such an early stage?
Yeah, certainly crypto environments are very different than Web2 environments. Fundraising is very different. When people expect liquidity in a token price earlier, it changes the quantity and quality of types of investors who show up in the private markets. And then, it also just changes community expectations. I can't say it's good or bad, but I'd say I'm inclined to think it's net good. There's a lot of, all the rules that were written around investor protection, I think suffer from the same psychological bias that's known in humans, which is people are more scared of losing what they have than they are more scared of not winning what they could have won. Even though those two concepts, right? Like if you lose $100 or make $100, you should theoretically have the same risk tolerance or aversion in both directions. We know human psychology, people are a lot more scared of losing than they are gaining. And I think this is very much codified in investor protections rules, which make it very hard to make money and get access to asymmetric upside things, and are really designed to prevent you from losing money. I think this is a real bug in human psychology, and obviously now in investor protections rules. Giving people chances to invest in things that could be life-changing is pretty important. And look, some people will screw it up. Some people will get scammed and conned. That comes with the territory. But I think it's important to allow there to be people who can do that. We shouldn't be trying to structure all capital allocation based on the lowest common denominator. yeah, I'm a big believer that people should be able to invest their capital as they see fit.
No, I think that's really interesting how you talked about the bug in the system, that these structures and investor protection laws were written with risk aversion in mind. I've read a ton about this in Daniel Kahneman's Thinking Fast and Slow, and he touches on these psychological effects. So the idea that it is now open, someone like me who comes from middle class, maybe upper middle class, is able to invest in these ecosystems and see these startups and get my own piece in them. It seems like really great. Also, just understanding the risks, and as regulation comes in, it'll definitely get better. But it's interesting to hear that it is a bug. So will we ever be able to break away? How will regulation come in? And I guess this kind of takes me to my next question. And I know the general answer here is this is very slow moving. We're still trying to figure out how to regulate things like proof of stake mining and those sorts of rewards. How do you see regulation playing a role in the token economy? It seems like it's 2-3 years out. What are your thoughts on how this will continue to develop?
Yeah, it's a really hard, complicated area. We spend a lot of time on it with our lawyers and other legal teams. And the short answer is we have no idea. There's a lot of things that could happen, and we don't have a particular strong view on what that will be.
Yeah, that's great. And just diving in more, I think it's great. We're here obviously at the Solana hackathon to get into Solana. How important is the infrastructure that's building on Solana, such as Serum with their central limit order book, oracles like Pith coming on, even Solana NFT infrastructure like Metaplex? How has this really cauterized Solana as the place to build? What do you see behind this infrastructure that's different than other networks?
Yeah, I think there's a few really interesting ways to think about this. What matters in a layer one blockchain in the long run is the credible neutrality of the base protocol itself. And that's going to be a function of a few things. Obviously, how well documented and tested the code base is, how bugs have there been over time and stuff. Certainly a function of stake distribution. Obviously a function of the number of physical validators or virtual validators, people who own assets and how much they distribute them. There's a fairly obvious set of things that lend themselves metrics to, generally speaking, increasing the credible neutrality of a system. One thing I've just thought is a little strange about the Ethereum Foundation in particular is that they really emphasize trying to maximize all of those metrics generally to be most credibly neutral. But then they also seem to hold the view of the core Ethereum Foundation itself should do very little in driving the ecosystem forward. And I think that's a real logical error. I think the fact that the core Solana team is building Metaplex and Solana Pay is really good for the ecosystem as a whole, because what that does is it provides a single shelling point. Like for Solana Pay and for Metaplex, they're both a standard. And with the problem with standards is if people don't all agree on the standard, everything is messy, and then you have to interop, and it's hard. But if everyone can agree on a single standard, that's great, because then the standard just works. When the Solana Labs team lends their social legitimacy, or I should say uses their social legitimacy to imbue a new standard on Solana, I think that's really powerful, because then you get rid of 1 to 4 years of kind of debate and consternation of which competing standards should we use, and everyone just agrees to use one standard. And the net ecosystem benefits you get from that, I think, are really profound. All the apps just work with each other and talk to each other, and it all just goes really quickly. We've seen the same thing with Serum, although Serum was not built by the Solana Labs team. And I think that effect of, hey, solving a base level problem with open standards, and I think everyone just come use these, I think is a very, very productive way to think about growing an ecosystem.